Let's talk about making your money work for you. Investing. It's not just for the wealthy or financial experts anymore. In today's world, investing is accessible to everyone, no matter your background or experience. Forget Wall Street stereotypes. Today, anyone with a smartphone and a few bucks can start building wealth. The secret? Index funds. These are simple, powerful tools that let you invest in the entire market, not just a handful of stocks. Instead of picking individual stocks and hoping you choose winners, you buy a fund like the S&P 500, which owns pieces of 500 top US companies. This means you're instantly invested in giants like Apple, Microsoft, and Amazon, all at once. When the market rises, so does your investment. Simple, low fees, and instant diversification. You don't have to be glued to financial news or worry about sudden drops in a single stock. But why stop at the US? The world is full of powerhouse companies. Toyota, Samsung, LVMH. These companies shape the global economy and offer even more opportunities for growth. A global index fund lets you own thousands of companies across dozens of countries, all in one package. You're not just betting on one country's future. You're investing in the world's progress. It's the smartest, simplest way for beginners to become global investors overnight. You don't need to be an expert or spend hours researching stocks. Even Warren Buffett, one of the world's greatest investors, recommends low-cost index funds for most people. He believes they're the best choice for long-term growth. You're not trying to outsmart the market, just riding the long-term growth of the global economy. Over time, markets tend to rise, and your investments can grow with them. As businesses innovate and grow, so does your investment. You're part of the world's progress, benefiting from new ideas and technologies. No need to stress over stock picking or market timing. With index funds, you can invest with confidence and peace of mind. This approach is patient, disciplined, and proven to build real wealth. It's about steady progress, not quick wins. Start small, stay consistent, and let the world's growth work for you. Even tiny amounts add up over time if you keep investing regularly. That's your first step to becoming a global investor. Take it today and watch your financial future expand beyond borders. Stock markets aren't isolated islands. They're a global web, intricately woven together by the flow of money, information, and opportunity. Every day, trillions of dollars move across borders, connecting investors, companies, and economies in ways that are both visible and hidden. A single event, like a US interest rate change, can ripple through Europe and Asia in hours, shifting the mood and direction of markets worldwide. News travels fast, and so do its effects. What happens in one corner of the globe can quickly impact the rest. Take your iPhone, for example. It's designed in California, built with parts sourced from Asia, and sold in stores across the world. Each company involved in this process is listed on different stock markets, showing just how interconnected our world has become. This global supply chain tightly links economies and markets, making them dependent on each other for growth and stability. Goods, services, and capital flow seamlessly across borders, fueling prosperity and innovation. When trade booms, everyone benefits. When crisis hits, fear spreads fast. A shock in one market can trigger a chain reaction, affecting jobs, investments, and even daily life around the world. That's why markets in New York, London, and Tokyo often move together, reflecting the shared hopes and worries of investors everywhere. Focusing only on your home country is like seeing the world through a keyhole. You miss out on the bigger picture and the opportunities that come from looking beyond your borders. The global economy is one massive engine with countless moving parts. Investing globally means you're part of the whole machine, not just a single piece. You gain access to new industries, emerging markets, and the growth of entire continents. You tap into the innovation and demand of billions, not just one nation. This diversity can help balance risk and boost your potential for returns. Understanding these connections is key to smart investing. Don't limit yourself. Think global, and you'll open the door to a world of possibilities. That's how you capture the world's growth, by seeing the big picture and investing in the future, wherever it happens. Diversification is the golden rule, one of the most important principles in investing that can protect your wealth over time. Don't bet everything on one company or country. Putting all your money in a single place is risky, no matter how promising it seems. Index funds help by spreading your risk across hundreds, sometimes thousands of companies, giving you instant diversification within a country. But to truly protect yourself, you should also spread your investments across different countries and regions, not just companies. History proves why. Japan's market soared in the 1980s, becoming the envy of the world. But then it crashed and never fully recovered to its former glory. Investors who only owned Japanese stocks lost big, while those who diversified and held US stocks or other international assets thrived during that period. In the 2000s, US stocks lagged behind, but emerging markets like China and India boomed, rewarding investors who had a global perspective. The truth is, no one can predict which country or region will lead the next decade. Markets rise and fall in cycles, often unexpectedly. By owning a global mix, you always have a stake in the winners, wherever they may be, and you're never left behind. This approach smooths out your returns, reducing the impact of any one country's downturn, and protects you from disaster in any single region. You won't always be the top performer in any given year, but you'll avoid catastrophic losses that can derail your long-term plans. For long-term goals like retirement, steady and reliable growth beats wild swings and sleepless nights every time. Global diversification is your shield against the unexpected, giving you confidence no matter what happens in any one market. It's the key to building wealth with confidence, knowing you're prepared for whatever the future brings. Don't gamble on one basket, own the world, and let your investments work for you everywhere. That's real peace of mind, and the smartest way to invest for your future. Ready to invest globally? Here's how. First, open a brokerage account. Think of it as your investment hub. Choose a reputable, low-cost broker like Vanguard, Fidelity, or Schwab. Fund your account. Start with any amount, even $25. Search for a global index fund or ETF, like the Vanguard Total World Stock ETF, VT. Type in the ticker, decide your amount, and click Buy. Congratulations, you now own a slice of thousands of companies worldwide. Next, automate your investments. Set up recurring purchases, weekly, bi-weekly, or monthly. This dollar-cost averaging builds your wealth steadily and removes emotion from the process. Consistency is the real secret to long-term investing success. A global index fund is weighted by market size. The US dominates, making up about 55 to 60% of the fund, thanks to giants like Apple and Microsoft. Developed markets, Europe, Japan, Canada, Australia, add another 30 to 35%. Japan leads in Asia with companies like Toyota and Sony. Europe brings industrial powerhouses and luxury brands, Volkswagen, LVMH, Roche. Emerging markets, China, India, Taiwan, Brazil, make up the rest, offering high growth but more risk. China's tech giants and Taiwan's chip makers are global players. When you buy a fund like VT, you get this blend automatically. The fund rebalances for you so you don't have to guess. It's a simple, sophisticated way to own the world. The US stock market is the heavyweight, over half of any global index. Its tech titans, Apple, Microsoft, Google, Amazon, Nvidia, drive global returns. This dominance means your global fund is heavily tied to US performance. But concentration brings risk. If US tech stumbles, your portfolio feels it. That's why global exposure matters. Other regions provide balance and opportunity if the US slows down. The US is a strong foundation, but not the whole house. For 2025, the US outlook is solid but uncertain. Think inflation, interest rates, tech valuations. Accept the US's big role, but don't ignore the rest of the world. True diversification means not betting everything on one giant. Beyond the US, developed markets in Europe and Asia are vital pillars. Japan, the UK, Germany, France, and Switzerland make up about a third of a global fund. These economies are stable, mature, and home to world-class companies. Japan's manufacturing and robotics, Europe's luxury and industrial giants, Switzerland's healthcare leaders, all add unique strengths. Investing globally means you benefit from their resilience and innovation. These markets offer stability and steady dividends, balancing the U.S. tech focus. They've weathered wars and recessions, proving their staying power. Challenges exist, aging populations, regulations, but they're essential for balance. Developed markets are your portfolio's anchor. Don't overlook them, they're the bedrock of global investing. Own them for true diversification. My top strategy for 2025? Buy the whole world and keep buying. The easiest way, a global index fund ETF like VT. It gives you instant, automatic exposure to thousands of stocks worldwide. Want more control? Pair a US fund, VTI, with an international fund, VXS, to set your own balance. But don't overcomplicate. Simplicity wins. Stay disciplined when markets swing. Don't panic sell. Automatic investments buy more when prices drop, less when they rise. Think long term. You're investing for decades, not days. Keep costs ultra low. Choose funds with tiny expense ratios. High fees eat your returns, so stick with providers like Vanguard or Fidelity. Consistency and low costs are your superpowers. That's how you build wealth in any market. Here's your action plan. Start today. Open a brokerage account with a trusted low-cost provider. Fund it. Any amount is enough to begin. Search for a global index fund like VT and make your first investment. Set up automatic, recurring purchases, weekly, bi-weekly, or monthly. Automation keeps you consistent and removes emotion. Don't wait for the perfect time. The best time is now. Ignore daily market noise. Focus on the long term. There will be ups and downs, but stick to your plan. Let your investments grow quietly in the background. This isn't a get-rich-quick scheme. It's a get-rich, slowly and surely plan. Take the first step today and set yourself on the path to financial independence. Your future self will thank you.